the cards to go up and test. Now, on the modeling that I've got here, if we at this point were to back off and then stage another rally back to equal or higher highs, and with a divergence in the relative strength index, that would be the makings for an initial top up here. When the key will be is to say, set up the divergence and then come back down and break the 20-day moving average and eventually the 50 days. So those are the numbers that we're going to be looking at. The S&P support down around 6,100 right now. So pullbacks that hold at that level are still within the uptrend, and we want to see how it does as the market pushes up against the all-time highs. Now, the credit markets, if we take a look at what's going on in terms of the high yield or the CCC or the FRED, the option-adjusted spreads for credit markets there from the Federal Reserve, or the global M2 moving to all-time highs, all those items are still bullish for this move. They turned bullish right in the second week of April. So the credit side of the equation is still supportive to the market up here. We'll be watching to see if they start to show any signs of being tiring. But in the meantime, the market itself, you want to be looking for potential double top around this high that we've just done now, with a retest maybe in the second half of this month. And if that test doesn't hold, then we can start to talk about a much deeper correction.
What's going on with gold and silver?
Okay, so the gold market topped right with the bottom in the U.S. dollar at this third week in April, and was expected to correct back to the 20 and then the 50-day moving averages. We had the bounce off the 20-day, bounce off the 50-day, and now what we've seen is just a trading range here. We've been the better part now of a month and a half, and that was the norm that you would expect after such an explosive high that was put in at the top. Now, what we have to watch carefully here right now on the at least intermediate term is that the dollar index has been down dramatically this year, down from 110 down to into the mid 90s, and that in the last week now we've got both daily and weekly signals that are setting up for an interim low for the dollar index. What we'll be watching is the first week now with a higher high in the dollar index would suggest that we're going to rally back to the 20-week moving average, and we're at 97 right now on the dollar index. The moving average is up around 100, so we could see a decent rally there. Now, part and parcel with that is that when we've had this type of a bottoming signal in the dollar index, and we go back now for 50 years, there's 25 examples that are like this one. And when you relate them to what happened in the gold market, you generally will see an interim high in gold, and we've had a really good bounce this last 3 or 4 days. And then you'll go back down to retest support levels, if not below them. So at this point, if the dollar index continues up in the next week or two, that could set the stage for a decent correction in gold. That would be against the seasonals. I mean, the seasonal here in gold is that July and August are pretty darn good. So, that's the positive bias to things. The negative here is the performance of the dollar index. So we'll watch the dollar index as a real key in terms of what to look for. Now, other precious metals, silver, platinum, palladium, have all been doing well and actually been doing better than the gold market. The platinum that we talked about in the last couple of weeks had its breakout of a long-term consolidation Typically, when you have those, you only correct back about 23%. That's a Fibonacci ratio. So you correct back about 23% of the move. That has happened about 7 or 8 days ago, and we moved up to new highs again. Platinum's going now through a bit of a consolidation the last few days, but the overall pattern is really bullish here for platinum. Now palladium is starting to kick in. So good. It's good to see those. Silver is just biding its time. I still think that a year from now, you could be looking at considerably higher levels than this. The 5-year cycle there has bottomed, and next year would be the optimum year for a high.
What's going on with crude?
Crude, just in a consolidation phase in here. Seasonality would push, say that we have the opportunity for a better bounce. I mean, clearly, the Iran Israel situation caused that big bump up when the Americans got involved. We got up to 77.5 to 80 on the rally and gave all that back in 24 hours. So here we sit around 66.5. I wouldn't be at all surprised that he pushed towards 70. My understanding is that OPEC wants to have another meeting about changing the quotas, so that actually can put a bit of an overhang on things.
What's going on with the U.S. and Canadian dollars?
Well, as I say, the U.S. dollar is trying to bottom out in here, good signals, and that could be setting up for a decent rally. The Canadian dollar has been holding in exceptionally well. Relative to the U.S., we backed off to about 72.5 a couple of weeks ago, and we're back retesting the high at this point. That low that we put in at 72.5 is a pretty critical support level, both on when we look at the daily and at the weekly chart. So the trend is up, and it's now starting to outpace both the CRB and the crude oil market. So that's a positive underlying bias in the Canadian.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, John Rubino next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is John Rubino, author of several books on the economy, including The Money Bubble. He founded the website dollarcollapse.com. You can find him on Substack at rubino.substack.com. Welcome back to This Week in Money.
Hey, Jim.
President Trump's been in office for over 5 months now. Is he doing a good job?
There are no one-word answers that apply to Trump. He's doing so many things, and some of them are great. Some of them are incredibly annoying. Some of them are scary. So I wouldn't even know how to break it down to a grade, A, B, and C. He's just got so much stuff going on. But I'll say things I like. One is he stepped right in and closed the border, which we really needed to do, and which prevents us from committing cultural suicide like Europe is doing right now. 4 more years of the previous administration, and we would be Germany or the UK or someplace like that that's just swamped with people from incompatible cultures and breaking down in every way imaginable. So we spared ourselves from that, and it gives us a chance to devise a coherent immigration policy going forward instead of one that's just chaotic. At the other end of the spectrum, he campaigned as a peace president, and we've been shooting and bombing everybody in sight, it feels like. The idea of the U.S. Being controlled by Israel used to be this weird conspiracy theory, and now it's apparently true. So that's the bad part of it. And, in between there's a lot of interesting stuff. So it's been entertaining, if nothing else.
Do you think President Trump wants to annex Canada?
No. I think he's a troll who loves to needle people for the fun of it. Same thing with Greenland. He's a real estate guy. He looks around at these very valuable pieces of real estate, and his impulse is to acquire them. So he's just doing it on a bigger scale right now. But no, I don't think, or let's put it this way, I think his people would explain to him that annexing Canada would be a very bad idea for the U.S. because, as a people, Jim, you guys are too liberal for the United States, or for a Republican government in the United States to want to affiliate. What the U.S. would really like under Trump is all that oil. So what's the province with all the oil?
Alberta.
I think Trump would snap up Alberta in a heartbeat if that was possible, but he wouldn't want all of Canada because that would be like taking another California and putting it into the U.S. electoral system, which would be really bad for Republicans. So, short answer, no, he's not serious about annexing Canada.
And Canadians would insist on government health care.
Oh, totally. You guys would vote like Californians, which no Republican in their right mind would want to facilitate. So, it's better for us to be good neighbors than it would be to try to join together in a new family.
Canada does have rare earths as well in Saskatchewan and Quebec.
Well, I think the ultimate end of the process is for North America to be, a kind of an economic community where Canadian natural resources and U.S. capital markets and technology and Mexican labor force all work together to create an extremely successful economic coalition. Rare earths are a crucial part of that vision. And Canada has a bunch. So, you guys, in terms of natural resources are probably the richest per capita people in the world. And it's just a question of converting those natural resources into wealth in a responsible way. So far, I don't know. I think that right now you're kind of impoverishing yourselves by not exploiting your resources to the extent that they could be exploited and still, have it be done in a responsible way. So I think that Canada at some point is going to recognize that it's an extraction, it's a resource-based economy and really take advantage of that.
Well, Parliament did pass their quick development law where instead of taking 10 years to get a major project out the door, now the max is going to be 2 years.
Yeah, see, that's the right kind of progress there because 2 years is plenty long enough to decide whether something is viable or not.
The commodities bull market is becoming more broad-based with silver and platinum joining gold. Why is this happening and will it continue?
Well, why it's happening is that, it's becoming clear, I think, that, two things are becoming clear. One is that no big country is controlling their budget anymore. So we're headed for a massive currency reset out there when the dollar and the euro and the yen just start losing value in a disorderly way. And that's good for real stuff. So, people are recognizing that and that's making commodities more interesting. Second, actually, there's three things here. Second is that commodities are just very cheap compared to, for instance, tech stocks. So value investors are suddenly taking a look. And the third thing is that so many commodities right now have phenomenal individual stories. They haven't been getting the kind of attention that they deserve because everybody's been focusing on gold. But, silver is just an amazing story. It's an industrial metal that is in deficit right now. We're not producing enough silver to satisfy the world's desire for electric cars and missiles and solar panels. So silver will go up just for that reason, if nothing else. But it's also a monetary metal that's connected to gold. There's a gold-silver ratio that people pay attention to. So gold going up pulls silver up. Copper is absolutely crucial for next-generation energy development. In other words, all those data centers that are going up for AI, require massive amounts of new electricity, and that requires copper. So copper is near an all-time high right now. Uranium has sort of the same story. It's really rocking because we're building nuclear plants all over the place. So I think a lot of what's happening now with the broadening of the commodities bull market is just that people are recognizing that each individual commodity has a very compelling story to tell. So we should be diversifying from just gold into all the other things that have similar stories. And we're seeing it happen now.
How much higher can gold go from here?
Well, if you're going to back the world's major currencies at something like a 40% level, which was common back in the days of the classical gold standard, then you need a gold price that makes the gold stocks valuable enough to match 40% of the world's fiat currencies. And to get there, you need a much higher gold price. I mean, 10,000 is the minimum that anybody even contemplates for that kind of a plan. And, you see people saying 40,000. And I wouldn't necessarily still be holding gold at the point that it hits 40,000. But I think you don't necessarily want to bail at 10,000. So somewhere in that range, 10 to 40,000 is your exit point. And I don't really know where it is right now, but I certainly don't think it's $4,000 an ounce.
Is $50 silver likely this year?
It's possible this year. Likely is maybe because we're halfway through the year, so maybe that's a little too strong. But the way things move now, look at what happened with platinum just lately. It just went straight up, for like 2 weeks, and now it's at a multi-year high. Silver could do something like that very easily if there's, a disruption on the COMEX where the exchange can't come up with enough silver to cover the delivery demands of future contract holders. Well, that could spike silver in a heartbeat. So whether it happens that way this year or 3 years from now, I wouldn't want to speculate, but I think silver is definitely a strong buy at today's price. And if you're already kind of well invested in silver, it's definitely a hold here, Same thing with, as with gold. This is not a time to be bailing on silver, even if there's a correction between here and $150 an ounce, which there could easily be. You don't want to be bailing yet because you don't want to miss that big move that everybody's been waiting for a decade and a half to happen, So we have to be in now, because being out of it, trying to time these markets by going in and out, risks missing that big move and then making the whole previous 10 years kind of pointless, right? So we're in it to win it now.
What's going on with the gold audit of Fort Knox?
Nothing, as far as I know. It's kind of like, it's in the dark room where they lock the Epstein files, they promise something, it sounds great, gets everybody excited, and then it doesn't happen. And it may not be for the same reason that the Epstein files aren't being released, which is that it turns out it was actually a Mossad CIA honeypot in order to incriminate a lot of billionaires in order to be able to control them. That's a hard thing to release into the ecosystem. What were we talking about? Sorry. Oh, Fort Knox. I'm sorry, Fort Knox. With Fort Knox, it's possible that they took an early look at it and found out the gold wasn't there. And they're worried about what that would do to the dollar if they do go audit Fort Knox. See, an audit of Fort Knox is only a good thing if it's all there. If you go there and it's either not there or it's encumbered by futures deals or whatever, then that's really bad for the currency that gold is supposed to be backing. So maybe they took a look at that and thought, oh my God, we can't just pull the trigger on something like that. So I think that's a possibility too.
Is there a focus on rare earths now?
There has to be. I mean, I'm not paying a huge amount of attention to them, but they're crucial for a modern military, among other things. So the people in charge of U.S. procurement are paying a lot of attention to this, and they're trying to hatch a plan that allows them to have safe rare earth resources that are available to them. And as you said, Canada has some. China has the most. So there's kind of a mutually assured destruction thing going on with the U.S. and China. We could sanction a lot of their trade and just bankrupt them because they rely on trade, but they could cut us off from a kind of natural resource that we really depend on, and that our military would kind of grind to a halt without. So I think neither the U.S. nor China wants to take the whole trade war thing to the next level, and I hope they're trying to cut a reasonable deal, because an actual full-on trade war would be in nobody's interest.
Does it look like lithium and the battery metals could have put in a bottom?
Well, the battery metals, besides lithium, I'm not sure about. But I think lithium is at extreme risk right now to the new solid-state batteries that are coming along. There are several car companies that are out there actually testing vehicles using these next-generation solid-state batteries that I guess don't use lithium. But they charge faster. They are able to charge to much higher levels. In other words, you can get 1,200 miles out of a charge on these cars, so these people are saying. So once they get the price down to a competitive level, they will probably take over, and that's bad for lithium. I don't know what the time frame of that is going to be, but if I was a lithium investor, I would be worried about the next breakthrough announcement in solid-state batteries, which might be, oh, look, we can do this at a competitive price. So from now on, all our cars are going to use these batteries. Something like that is liable to be announced at some point in the next few years. So that makes lithium more risky than I'd be comfortable with.
U.S. stocks have been hitting new all-time highs. We heard a prediction of 65,000 for the Dow. What are your thoughts on that?
I think U.S. stocks are wildly overvalued. If you look at, for instance, the Buffett indicator, which is the market cap of all equities compared to GDP, that's usually something that reaches a certain level and then there's a big stock market crash. Well, we're way beyond that level right now. So by that measure, equity market cap to country GDP, U.S. stocks are wildly overvalued. And every time we've gotten anywhere near this in the past, there's been a big crash. So that makes me nervous about U.S. stocks. Now, at the same time, the world is really chaotic. And in times of chaos, the U.S., even with our horrendous finances and our idiotic foreign policy, we're still safer than China or Russia or Brazil or big parts of Europe. So capital still flows into the U.S. In times that are chaotic, even if the U.S. is causing the chaos. And that's part of what has elevated U.S. equity valuations in the last few years. And there's no reason why that can't continue if capital flows continue. So you've got wildly overvalued stocks that are still seen as a safe haven asset by a big part of the world. Okay, the way we should respond to that is to definitely have some shorts on hand. In other words, buy some put options on the S&P 500 and the NASDAQ in case of that big crash. But don't just do a big short scenario where you bet the farm on U.S. stocks crashing because you've got this other thing, these capital flows out there, that might, in the short run at least, be more important than equity valuations. So, I have some bets that the U.S. is going to crash, but not anything like the kind of short bets I had back in 2007 when the housing bust was obvious. It was definitely coming, and you want to short that market and everything related to it. Nothing like that. But I think you should definitely have some shorts in the form of a small bet against the U.S. stock market.
Do you think President Trump wants to end the Fed?
I've never heard him express an opinion about that. I think he's got people around him who would like to end the Fed. I think it's conceivable. He's got some gold bugs in his crew, and it's conceivable that they talk him into a new gold standard or something like that, which would be effectively ending the Fed in its current form, because it would be putting a hard limit on money creation. So from that perspective, we could change the Fed in such a way that it's the next best thing to ending it, I think, pretty easily. But actually ending it. Oh, and one other thing that happened with the whole end the Fed thing was that the proponents of that, the Ron Paul libertarians and Rand Paul and some of the guys in Congress who are libertarian enough to vote against Trump's big, beautiful spending bill just now, have really antagonized him. So if there was any chance of him listening to them about ending the Fed in the past, there's not now. He's trying to kick them out of, like Thomas Massey, for instance. He's trying to primary Thomas Massey, who is normally a huge ally of a Republican president. I mean, he's a libertarian, which is mostly compatible with mainstream Republican thought, and certainly with right-wing populism. But he didn't want to vote for a wildly unbalanced budget, and so he voted against it. And now Trump is trying to primary him. So, those guys telling him, let's end the Fed, are kind of probably going to be met with deaf ears now because Trump is so mad at them.
Some central banks have started cutting interest rates. Will the Fed join them?
Central banks are cutting interest rates, and the Swiss central bank went all the way down to zero just lately. So we're back to, at least on a small scale, ZIRP, and it won't be long before we're heading into NIRP, negative interest rate territory. So, yeah, I think the Fed has to cut at some point, or dramatically cut when there's like an equities bear market or something like that. But, we just had a really strong jobs report this morning, and that argues against lowering interest rates, because if you've got, massive amounts of new jobs being created out there and wages going up, that's inflationary. That's wage price inflation. And that's something the Fed usually leans against with higher interest rates. So we'll have to see how it goes. In other words, what big macro thing is going to change going forward? Because we could have a recession that is either caused by or causes an equities bear market and all the financial instability that implies. And that would spook the Fed into cutting. But if we're just going to have a strong jobs market and rising wage inflation, that's tough to justify cutting. And then meanwhile, you've got President Trump screaming at them to normally you don't see presidents going on social media calling Fed chairman names, but that's what's happening in the U.S. right now. Trump is literally calling the chairman of the Fed unkind names right now on social media. And the Fed can respond to that in one of two ways. Either just ignore him and do what they want, or actually three ways: capitulate and do what he wants, or do the opposite of what he wants just to spite him. So you've got three different possibilities there, and we'll just have to see what the Fed chairman and the Fed governors decide.
The U.S. is passing a massive new spending bill. Does this guarantee rising deficits for the next few years?
Yes, but there always was the guarantee of rising deficits for the next few years, because there's no way to cut entitlements, especially when baby boomers, the biggest, most politically influential generation in the existence of America, does not want their benefits cut. So as boomers retire and go on Social Security and Medicare, that requires massive amounts of new spending, and there's no way to get around that. So we were always going to head for rising deficits from here. But now Trump, and the spending plan hasn't passed yet, but it's a lot of tax cuts and a lot of increased spending and very few spending cuts. So unless those tax cuts generate massive new growth, which that's a whole other argument, but unless that happens, deficits will be even bigger going forward than they would have been if we'd just been on autopilot. So the U.S. is already running deficits of 3 or 4% of GDP, and it's already got interest cost on that debt of $1.5 trillion a year and rising. So we're in the death spiral part of the process now, where we're borrowing to cover our interest expense. That's what you do as an individual. You go bankrupt within a few years. And when a government does it, their currency collapses. So we're there. That's already getting